Hi, Jonathan York, Bay Financial Partners, looking at investment markets. As expected, the Fed left rates unchanged last week. So that leaves the target rate at still 3.5 to 375. And really, the sort of dot plot implied that potentially there was one further cut to come, maybe sort of June time. But inflation was still noted as being elevated and is still well above the Fed's target of 2%. Currently running around sort of 2.7, 2.8% on core inflation. Now, obviously, Trump vehemently disagrees with that figure. He claims that inflation is pretty much gone from the US economy and even quoted it as low as 1.6, which is clearly not the case from the evidence provided on the data. What was interesting as well is Trump has nominated Kevin Warsh as the new Fed chair to replace Jay Powell in May, subject to congressional approval. Now, what will be very interesting to see if Jay Powell does stay on, because his term as Fed governor doesn't expire until 2028. But the markets have viewed Kevin Warsh as a pretty safe pair of hands, and certainly rates on the 10-year, more importantly, didn't really spike higher on the back of his nomination. But what is quite interesting is that 10-year is still well above that all-important sort of 420, currently trading around 428 on the yield. And the 2-year is around 365, and the 30-year 485. Also, the housing data as well for December was really quite weak. Buyers there were sort of cancelling potential purchases at around 16% level, which is one of the highest for a number of years. Now, as well, we've got another government shutdown, and really the Republicans and Trump is really trying desperately to get Congress open again, because that's the second government shutdown within the sort of first year of the Trump administration. Now, Trump's still talking about potentially no income tax in the US because of all the money that's coming in from tariffs. But again, if you actually look at the math, it just doesn't stack up. With the money that's coming in from tariffs, there is certainly not enough there to abolish income tax in the US. And also as well, for all the claims about the trillions of dollars that's being invested in the US, as yet very little of that investment has actually been put into practice and in place. On the earnings, really pretty mixed out there. You're seeing a little bit of a rotation out of sort of the high tech into the sort of broader economy out there. Because Microsoft earnings, they were okay-ish, but a little bit of a concern over the sort of cloud income, and that saw the shares fall by around 10% on the day. Well, Meta went the other way. They had a pretty good set of results, and their shares were up around 10% off their earnings. Apple also had a pretty good set of results as well, driven by iPhone sales. And just interesting to note as well, Cisco has finally just traded above its dot-com bubble high price. So that's taken 26 years. And as yet, for all the talk about Trump being able to sort of settle the Russia-Ukraine war, that is still raging and approaching its sort of 5th year now. Now, oil OPEC Plus has agreed to keep production levels where they are, and that's to see a bit of a spike up there, but just sort of come back a little bit as potentially sort of geopolitical sort of tensions look to ease slightly. Currently trading around 62.70 and change. Now in the UK, PM Keir Starmer has been in China, and it's just going to be interesting to see what comes out of those meetings. Now in the EU, they're sort of celebrating a big trade deal with India, which is really potentially very beneficial for the European economy. Also as well, it'll just be interesting to see what sort of boost the Italian economy gets with the Winter Olympics coming up in the next couple of days. Now, as expected after that high print on the inflation data in Australia, the Reserve Bank did hike rates by 25 basis points, taking the cash rate to 385. Now, that's the first hike from any sort of central bank in what was seen as sort of a global central bank easing cycle. So it'll just be interesting to see what happens with inflation now, and also the Australian economy, because at the moment it's sort of pushing on at a pretty good rate, still getting a reasonable sort of boost from potentially sort of China increasing its sort of GDP and growth out there. But also as well, when you look at the recent inflation data, the breakdown, international travel was quite a big component of the increase. Now here in New Zealand, the Reserve Bank does meet in February, but no change is expected on the interest rate front. The OCR is expected to remain unchanged at 2.25%. But again, with that latest inflation data, which was a little bit higher there at 3.1, it's just going to be interesting to see what the sort of commentary comes out with. Although again, when you look at the actual breakdown for the inflation data, it was international travel that really was one of the main contributors to the higher print. But also as well, expected to see around sort of 40% of mortgages to be reset in the next 3 to 6 months. And they will be reset at substantially lower rates, which obviously puts more disposable income into the economy. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.